Commodities continue to tell a complex story. Some trying to form bottoms, others pushing deeper into bearish momentum, and few flashing early signals of explosive rallies. In this week's Commodities Digest, we walk through oil, natural gas, uranium, silver, gold, and agricultural markets, with a special spotlight on lithium setup for a potential midterm rally. And today we start with the energy and we start with oil. Oil, unfortunately, is bearish at this moment, and it closed the week with the bearish candle on the daily frame and on the weekly frame as well, closing just by a few basis points below the previous week low. To tell this truth, the 3-day candles potentially form a ladder bottom. However, this potential bullish formation requires a very strong confirmation. So in general, oil is bearish, and this is the chart that we've been tracking for a while. And for those who followed our call at the end of July, oil already lost over 10% from the most recent top. So far, we are not seeing any changes, and this oil approaches our target, which is somewhere between 60 and 54, quite wide at this moment. However, at this point, we cannot exclude a possibility for falling lower into the blue rectangle. So this is the potential for oil for the next week, or for even for the next couple of weeks. So now let's move on to the next, and we'll talk about natural gas. Natural gas, based on the candles, it is attempting to form a bottom. However, based on the daily candles, the 3 green candles, they were not sufficient to flip the odds bullish, and now it can even look we can even look at it as a potential bearish continuation pattern, like a falling 3 methods. On the 3-day frame, natural gas formed a thrusting line, which is also viewed as a bearish continuation, and on the weekly frame, this doji can be viewed, and on neck doji also a continuation pattern. However, the chances for a bullish reversal are somewhat elevated. So I would say that the candles at this point are at somewhat neutral position, and we would be looking for a strong move, for strong directional move, either up or down. And if we look at the Elliott waves, this is the midterm chart that we've discussed for a while. So far, we are seeing natural gas to continue moving down. It already hit our target that we outlined a while ago, minimally hit it here, but at this point, until we see a very strong confirmation of reversal, we are expecting it to move lower, and possibly much lower into the blue rectangle. However, it's not going to happen overnight, and the chances for natural gas to continue losing its value are significant. If you're interested in more detailed and more sophisticated charts, long-term and short-term, we publish them normally on our website in our weekly reports for oil, natural gas, and for other commodities. Now let's talk about the next one, and this is uranium. So if we look at the URA Global Uranium ETF, we are seeing that uranium is consolidating right now. However, some signals like an 8 by 20 EMA fresh bearish cross it can signal a much stronger pullback, much lower, and although that's at this point it is not confirmed, especially on the weekly frame. 2 weeks ago, uranium made a very strong bearish candle. However, it wasn't confirmed for the next 2 weeks, and somewhat similar for the 10-day frame. There is a chance, but the bullish odds are at this point fairly significant. So, and that this position reflects in our Elliott wave chart. So at this point, we are not sure which path is going to be taken. Either a continued wave upward, which is our purple path, waves 1, 2, and this is wave 1, 2 of the potential rally much higher, or wave 1 completed here, and we are looking at wave A, B, and potentially wave C downward. And before we were expecting it to drop towards 33.28, but 36 this is an updated target based on some new developments. So this is perspective for URA, Global Uranium ETF. And now let's have a look at energy fuels. So the situation here is pretty much the same. So we are seeing consolidation. So no trend has flipped bearish at this moment. And there is a fairly good chance that we might see a continued rally from here. The same happens on the 3-day frame. The weekly is a little weaker. So we had a very strong bearish engulfing here, and the two weekly candles were not able to set up a direction for either up or down. And the 10-day frame at this moment, it's kind of dangerous from the technical perspective, but at this point there is no confirmation, and the next 5-day might be very critical for this. Speaking about the chart, this is the chart that we've been tracking for a while. Potentially energy fuels completed wave 1, big wave 1 that started in April, and we would be expecting wave 2 downward. Perhaps it might be somewhat similar to the wave 2 that we were seeing here. You can see that from April to the end of May, energy fuels were forming wave 2, a horizontal one and a very lengthy. So somewhat similar can happen for the wave 2 here. It might take several months, several weeks, or even months to develop, and it might be very shallow. And speaking about the mid-long-term perspective, this is our famous call on April 9th for energy fuels when it was close to 377, and after this call we can see that energy fuels rallied over 180%. So those who listened made some money. Okay, so that's all for uranium, and now let's talk about the next one. Let's move to precious metals, and we start the discussion with silver. So silver, from the candle's perspective, it's somewhat bearish, but still closer to neutral. We had on the daily frame, we had a dark cloud cover, but it wasn't confirmed. However, silver lost a major support line, 8 days EMA here. However, again, I'd like to emphasize from the candle's perspective, nothing is confirmed. Now, on the 3-day frame, also a neutral closure. However, I'd like to say that this is a confirmed, these 3 candles in the middle, they are a confirmation of a top technically. On the weekly frame, there is a neutral position here. attempts to set up a direction, but none is set at this moment. And I would like to say that on the technical perspective, silver is building a momentum, a bearish momentum. And last week we posted a statistical study about the momentums and what would be the perspective for silver. If you're interested, it is available on our website. And speaking about Elliott waves, at this point, it's a big question, because what I'm seeing here is that impulsive waves are completed in both directions, and this could be a sign of a bigger zigzag that silver is forming for a corrective wave. And at this point, I'm tracking two possible counts. One is the green one, assuming that this was the end of correction and we had wave 1, wave 2, and now it's starting wave 1 and 2. Potentially the setup 1, 2, 1, 2 for a much stronger move upward. And at the same time, we can consider this move down as a impulsive wave, which has all chances to be. And this very a very strong wave down, wave up could be just a zigzag for wave 1, and now for wave 2, pardon, or wave B, and we would be looking for a continued wave down. So at this point, we are waiting for a strong directional move. And if we look at SLV Silver Trust, at this point the daily and weekly candles are neutral, and I would like to say that there is a high risk of forming a bearish candle on the monthly frame in 12 days if silver fails to break above to close above 35.91. This candle, no matter what color is, would be a bearish one. That's a big risk, and we are alerting about it right now. Now let's talk about another precious metal. This is gold. Gold is looking much more serious compared to silver. So first of all, it flipped 8x20 EMA lines in a bearish cross. If we have a bearish engulfing on Thursday and the posing doji on Friday, as a result of weakness, we have a strong bearish engulfing on the weekly frame, and with a break below the support line, it could be the beginning of a much serious move. And this is the possibility for an extended bearish momentum. The 10-day frame, which is closing on August 21st, this is the level that the current candle needs to close above if gold wants to continue higher. Otherwise, it will be a bearish engulfing at this moment and a very strong move down. Well, that's the candle's possibility, and on the Elliott wave perspective, we still don't have a clear point. So at this moment, I'm looking for two possible counts. One is either purple or the red one. They're pretty much the same, an A-B waves, and the last one could be wave C or wave 3 of a bigger wave downward. And at the same time, the cyan one is a potential triangle that is forming by gold, and I'm even talking in the weekly report, I was even talking about a 9-wave triangle possible with a possible move towards here. Anyway, the triangle signifies that the wave we are looking at is wave 4, and it is the second to last wave before a big move down. Well, that's the perspective for gold. Now let's talk about the other commodities, and I have coffee here. So as we discussed in previous week, coffee is set for a big ride, and the weekly bearish bullish engulfing candle worked out very well this week, and we have a strong continuation and strong reversal. In 2 days, there is a very good chance that coffee forms a tower bottom on the 15-day frame, and in this case it will be a very strong further confirmation of a bottom. And on the daily frame, we can see that right now the daily candles are challenging the 100 and 200 days moving averages, and at the beginning of the week it successfully crossed and backtested the 50 days moving average. Speaking about the chart, this is the one that we discussed early in June, saying that coffee is about to form a bottom, and indeed it did. So now we are looking for a very significant rally towards 450, 545, with a midpoint about 492, based on several Fibonacci levels. Well, that's the perspective for coffee. And now let's talk about another commodity, and this is corn. So corn is also trying to set up a bottom. However, I'd like to say this is very similar to what natural gas did. 3 candles, 3 failures to form a bottom, and this could be a very strong bearish signal. So everything depends on the next candle. So Monday would be really crucial for this one. 3-day frame closed with a piercing line, and this is technically a bullish sign. However, it requires a confirmation as well. And on the weekly frame, there is a possibility of a Harami candle, which can also turn into a bullish path. Speaking about the Elliott waves, no changes for us at this point. So far, all the paths that we projected remain on the table. The only thing that we don't know yet which one will be taken, either the blue one or the purple or the red. So if we see move lower here, a lower low, I would be more comfortable saying that we are looking for a strong reversal. At this point, we remain on hold until we see a confirmation for either path. And the final one today, I wanted to discuss lithium. I haven't looked at it for several years, and I am seeing a few interesting signs here that might support a strong rally for lithium. So first of all, I'd like to say that we have it's not done yet, just 4 basis points apart, 50 over 200 days moving average bullish cross. I think this is going to happen the first thing on Monday morning. On the weekly frame, I'm seeing also a strong bullish sign, and the monthly candles are setting for a big bullish reversal. And if bulls hold the momentum for the next couple of days until the end of August, we might see a very strong double bottom on the 2 months frame, potentially breaking above the 50. So this is 100 months moving average, so similar to this purple line. Well, and now let's have a look at the Elliott wave. So that's I'm seeing a potential impulse being formed here. So this could be wave 3. This then we would be looking for wave 4 here and wave 5, and this would be an impulsive wave 1, 2, 3, 4, and 5. So this is the possibility here. So once we have a shallow pullback, and we can see a wave up. However, speaking from some Fibonacci perspective, I would be considering wave 3 a little higher here. Also, this is also a possibility. Wave 3, 4, and 5 would be a little higher. So if we look from the perspective of channel, and let me bring it here. So this is a potential channel for the wave. I think that we might align very well with this one as well. So this again would be wave 4 here, wave 4 if wave 3 extends a little higher, and this would be the perspective. So from this level, I think that we see a perspective for about 20%, at least 15 to 20% rally from here after a pullback. That's the perspective for an impulsive wave. And if we have a very strong confirmation on the monthly, especially on the monthly and the 2 months frames, I would be looking for even bigger potential. So this would be wave 1 of a larger degree. We might see some pullback for wave 2, and an even stronger rally is expecting to happen. So that's the short midterm perspective for lithium, and I hope you can take advantage of this setup. So that's the discussion for the commodities, and I would like to remind you that our position on SPY in our swing room was long on August 13. Over the past 12 months, our swing room delivered over 40% unleveraged returns, more than double than the S&P 500, which made only about 20. This consistency comes down to discipline and execution, led by master trader David. And now let's wrap it up. This week's landscape paints a mixed but compelling picture. Oil still shows no recovery signs. Natural gas is trying to bottom, but confirmation is key. Uranium consolidates, though risk of a pullback lingers. Silver holds neutral candles, but bearish momentum builds beneath. Gold ended the week with a bearish close, opening the door for lower prices. Coffee looks far stronger, signaling a bottom and higher prices ahead. Corn attempts a bottom but lacks confirmation. Lithium stands out, with midterm signals pointing to a significant rally. The story is clear. While traditional metals may struggle, energy and select commodities could hold the next big opportunities. Deeper details and chart work are available in the written versions for members. If you are not yet inside, we've just launched a free 7-day trial, giving you access to all premium articles and Tier 2 daily trade signals. As always, engage with us, share across your circles, and follow on Reddit, X, and YouTube. At Investing Angles, we chart the charts before the crowd even blinks.